How to get 100% financing. Hi, I am Jaco Grobbelaar, the founder and managing director of Prosperity Enterprises. Do you know that when you buy property, it is possible for you to get 100% financing? So often people are concerned that when they are going to buy a property, that they won't be able to get 100% financing. And often there's a misconception out there that if you buy an entity such as a property company, that you will not be able to get 100% financing because of the fact that you are buying in a company. This is simply not true. If you follow the steps that we are going to discuss in this YouTube video, there's a great possibility that you can get 100% financing for the property that you are acquiring, even if you are buying it in a property company. Number one, use a bond originator. Do not try to get financing yourself. A bond originator does this for a living. They do it from morning till night. They know exactly how to package your finance application. They know exactly how to speak to the banks. They know exactly what needs to be in place for you to get 100% financing. But make sure when you work with a bond originator, that you work with a bond originator that understands structures, that understand buying in a company where the company shares are held in a holdings trust. Because often when you speak to a bond originator that doesn't know how these structures work, they will tell you that it's not possible for you to get 100% financing. So make sure that you are using a good bond originator, one that understands structures, that can go to all of the banks on your behalf and apply for financing at each and every bank so that you can look at what banks are offering you and then make the best decision. Number two, make sure that you have a good credit score. Remember, even if you are buying property in an entity such as a property company, you are still going to have to sign surety in your personal capacity. This means that having a great credit score in your personal capacity is of utmost importance. So how do you build your credit score? Well, the first thing is to know your credit score. So firstly, make sure that you get a credit report on yourself and that you see where you are at. See what your credit score is. See where you can improve. See if there are any judgments. See if there are any arrears. And make sure that you sort those things out. Then, make sure that the debit order never ever bounces. Make sure when you want to build your credit score that a debit order always gets paid and that you pay your bills on time. When you pay your bills on time, it reflects good on your credit score and that increases your credit score. Then you want to keep your credit utilization rate low. That means that you want to not max out your credit cards or your clothing accounts or whatever credit you have. Now remember, in order for you to build a good credit score, you need to have debt, you need to have credit. So you need to have that clothing account in place. You need to have that credit card in place, but don't max them out. Make sure that you only use a small portion of the available limit that you have, because in that way, you have what is called a low credit utilization, and a low credit utilization is good for a credit score. Then, avoid opening too many accounts. If you open too many accounts, on the other hand, this might also affect your credit score negatively. So have a couple of credit accounts, but not too many, and don't open accounts too frequently. Very important. Don't close old accounts, because if you close old accounts, remember that pushes up your credit utilization ratio, because now you've got less available credit and more debt on that. So if you have an unused account, keep it open, just don't use it. And then lastly, be patient and persistent. It takes time to build your credit score, but with time, your credit score will improve, and as your credit score improves, the terms that you will get from the bank and the financing that you will get from the bank will get better and better. Then, number three, open a new entity to buy property in. Whenever you have a challenge to get financing, maybe you've got a property company and that property company already has a couple of properties in, open a new entity and apply with a new entity. I have seen from practical experience that often when I go to the bank with a brand new entity, it's easier for me to get 100% financing than if I go with an entity that's already used. Now remember, a lot of people are concerned and say, but you can't get financing on a brand new entity. You absolutely can. Remember, we will give a letter that states to the banks that the entity is solvent and non-trading, which means that this is a brand new entity, and we will then sign surety for that entity when we buy the property. But by registering a new entity, a new company, you make it possible for you to get 100% financing again. And then lastly, earn a consistent monthly income. It is possible to get financing if you are self-employed and if you don't pay yourself the same amount every single month. But your chances of getting good financing, good terms, and 100% financing is so much better when you have a pay slip and you have monthly income paid to you on a monthly basis, and it's the same amount every month. If you like this content and you would like to receive more of it, remember to like, share, and subscribe. And then remember to book your one-on-one consultation with Prosperity Enterprises if you would like for us to help you with your trust structuring. Thank you.